Alright, what's going on, guys? I told you guys I would make this video a while back, but I am really bad at procrastinating. So here we go. Alright, so let's make trading look easy. This is going to be kind of a rundown of the style that I use to trade, things that I look for each and every time. So here's a little table of contents. So we're going to go over tools and indicators, support and resistance, 9 EMA, the retest pattern that we've been using, just general patterns, and then maybe just summarize everything there at the end. So first thing that we're going to look at is going to be the indicators that I use. So I use Ripster's EMA clouds, the 9 and the 20. The others are useful. I just don't for my type of trading. I don't like them. They're kind of busy. There's a lot on the screen at one time, which I just don't like. So we just use the 9 and the 20, and honestly, we could probably get rid of the 20 and only use the 9, but that's just me. The second is going to be VWAP AA, which stands for Volume Weighted Average Price, and then the AA is Auto Anchored, which means it takes pre and post market trading and anchors them where they left the day off, so that we can begin the day at the previous. So VWAP is again, it can be used pretty often, and it is a very good tool, but it's not required for what we do. The third thing there is going to be volume profile. I don't really have a great way of describing volume profile other than the fact that it gives me a line letting me know where the most amount of volume is for the day, whether it be high or low depending on where we open with pre-market. It'll give me a indicator or a marker letting me know what the highest volume price is for that day. And then lastly is going to be data, and we'll go over that pretty in depth throughout this, but data is one of the most important things that you can use. That's why we've really been pushing Flowtopia. I know some people like Tradietics or whatever it may be, but they're both good platforms, but we've really been pushing Flowtopia because data is the most important thing, I would say, that I've been using over the last about 6 to 7 months here. So let's take a look at let's start with data. So these are the two forms of data that I like to use. They are GEX level, which is gamma exposure levels, and just a general market net flow. Going to be a little bit difficult to explain in depth in one short video. That you could have an entire video over GEX on its own, but a general rule of thumb that we've been going off, or at least I've been going off, is if you see a big green level like this here, that is going to be more of a resistance level. So SPY or what be it may go up to that level, but getting past it is going to be pretty difficult. Not impossible, of course, but it will be pretty difficult to get past it. The bigger the green, the longer it's going to take to get past that level. On the flip side here, the larger the red level on GEX is the I use it as kind of like a magnet. You can see here magnet levels, but I use the red GEX levels as a magnet, and so the larger the red GEX level, the higher chance SPY will go to that price. So you can see here we would have to get past 438 obviously to get to 439, but there's a big resistance here and a pretty big magnet here as well. So with flow looking the way that it did, I took these screenshots just moments apart, and so if we look at this here, we'll look at these two, but then also this here. So the way that I read this, your green line is the amount of calls being bought at the moment, your red line is the amount of puts being bought at the moment, your white line is your stock price. And so with that, these two things working in unison, right? So we had a large amount of calls being bought at one time. This, as you can see here, calls were on their way up at the same time that this red GEX level was growing. And so I was pretty confident that we were going to get through this resistance level right here I was pretty confident we would get through that, make our way up to 439, and I came to that conclusion because of the high call volume moving forward. Again, that's a really quick rundown. This could be a whole entire 10-15 minute video just going over these two things and how they work in unison, and different things you can do with them, and how you can use them. But for the most part, that's how I do it. We can, if you have any more questions, just shoot them my way, and I can go a little bit more in depth with those. But moving forward, one of our favorites that we have been using here recently, this is Ripster's EMA Cloud. Like again, I said last time, the 9 and the 20 are what I use, but for the most part, it's just the 9. And so the 9 is going to be these green ones here, and like this large red one here. They're the bands in the background there that you can see, and they kind of follow SPY, and well, they just follow the stock in general. They work for everything. And so with that being said, a green 9 EMA is typically a pretty bullish sentiment. So you would see a large green EMA, and that would typically mean that we have some type of buyers stepping up for the most part, and moving the market in an upward fashion typically, and that can be shown on the flip side here, right? So you can see here our EMA flipped from, I can't zoom in, but you get the idea. Right here at this point, the EMA flipped from green to red. Now, it was very small, and that's why it flipped. I mean, let me try that again, because this is already a 6-minute recording. We're not starting over. Okay, so with EMA, the more bullish you are, the larger the band is, and the same goes for the downside. So as we fell this morning, and SPY just continued to head downward, the EMA band started to grow. It started to get bigger and wider. As SPY fired back in the opposite direction, you can see that the EMA band got much smaller, and it starts to close. Once it closes, it will eventually, you get rid of some of this, it will eventually completely close and flip, which it did on this candle here. So this strong green candle and this strong green candle completely flipped our EMA for the day. Even though we were still down from close, the EMA was green, showing us that we had some type of bullish sentiment moving forward, and into the later part of the day. And as you can see, it followed suit. We do have a little bit of a pattern that I'll show here in a little bit that we have been using a lot with these EMAs, and it's really helpful. It's probably my favorite trading style right now. But moving forward, another one kind of on the same aspect of the EMA clouds is VWAP. Like I said earlier, VWAP is for the volume weighted average price. So this is basically just a moving average throughout the day of where the volume is at. And so the green lines can be useful, but for the most part, I only use this blue line in the middle. It just kind of lets me know where we're at for the day. Most of the time, if you clear over VWAP, we're going to see a bigger push to the upside. If you drop below VWAP, you're going to see a little bit of a drop, but for the most part, the stock likes to stay very close to VWAP. It likes to stay very close to that blue line. It doesn't like to get too far away from it. So if you do seem to fall at a rapid speed, you will typically recover in some aspect throughout the day. But yeah, you can use it in this fashion. A good way to think it is if you are under VWAP, the bears are winning. If you are over VWAP, the bulls are winning. It's pretty simple. But I do just like it because this little blue line can typically be a pretty strong indicator of a support level for the short term. So moving over into volume profile. Volume profile, again, you don't have to have it on all the time. It's something I just flip on and off as a little bit of an indicator to show me kind of where we're at through the day. Volume profile is nothing more to me is nothing more than this orange line right here in the middle of this. That orange line pretty much is, not pretty much, it is where the most amount of volume went into the stock for the day. So whether it's buyers or sellers or a combination of both, this is where the most volume is happening on, in this case, SPY for that day. It will move if you, let's say we have a bunch of buyers step up and we make a push up to like 440 on SPY for this example here. If we have a bunch of buyers and sellers, that line will flip up to 440 if there is more volume. So it's not a static line. It doesn't just give it to you every day. It is in real time. And it kind of goes the same line as VWAP. It's just a good indicator of support or of resistance. So in this example here, let me grab the eraser. In this example here, you can see it was a almost perfect resistance level, and then hopefully, which I haven't checked back on the stock, but it looks like we have gotten over it. So potentially this could have been a support flip, so from resistance to support, and maybe we made the push upward. I don't know, I haven't seen it, but that's how you could use that. As long as you are up and over and holding over this this support level or this volume profile, it is a good indicator of support. And then speaking of support and of resistance, that is my biggest thing. That's my bigger than data. This is my number one way of trading, and it always has been, and I think it always will be. So this is support and resistance. And there's a couple other little things on this that I will go into. But for the most part, this is support and resistance. The way that I find support and resistance is I typically go back on the, I know it says 5 minute because that's when I took the picture, but I will go back on the 1 hour and on the 4 hour chart, never any more than that. And I will basically just draw these lines, these yellow lines like this one and this one. I will draw those lines at a, think of the best way to put this. I will draw that line at a position in this on the stock that has been touched and rejected or supported at least 4 times. So I don't have a great example here, but we could probably potentially draw one somewhere in this range, right? So it broke through here, but you can see we have a couple touches there on this line. If we continue it over, there's another touch. It broke underneath, but this was at the dump yesterday, so like as all the stocks were falling because of Jackson Hole this morning, everything was falling. So we can kind of ignore that because then in pre-market trading, hit that level again, really close right here. That's up to you if you want to use that. I personally would, but you wouldn't have to if you were being very strict with how you made your support and resistance. But anyway, as we continue on, you can see, boom, again, all of these right here went ahead and touched it. This one would have been really close, like if you were using it as a stop loss. These were really close to closing underneath that level. But that just kind of gives you an idea. You can see it touched 2 or 3 times here, touch there. Even when it breaks underneath like this, I know this slide's getting a little busy, but even when it breaks underneath support like this, you can see that next green candle right there, it tried to push back up and over, and there was resistance. And so normally when you break over a resistance level, or once you break over a resistance level, it would typically become the support, and if it is supported, then you will see more upside. In this case, we broke underneath support, we came back up, and it resisted. That means that line is no longer support, but it is resistance. And so with that being said, you kind of get the idea that multiple touches on a linear line, you can't bend them. That goes into patterns, but for the most part, support and resistance should be straight lines across your chart at a point that has been touched, supported, or resisted at least 4 times, going back a couple months or so. You can make really big and really long and old support levels, and those are good too. They're just a little harder to spot. And same thing here, intraday support levels. Let me get rid of all of this on here so we can talk about that. So as you guys know, if you've been following me for a while, I don't really like to swing trades. I don't really look for things that are 3, 4, 5 weeks out. I'm an intraday trader. I don't even look at the market until about 8:30. Sometimes a few minutes before, but for the most part, 8:30 is where is when I start looking at the market, because I don't chart pre-hand. I take what is given to me that day, and that's pretty much where I start. I don't have any bias up or down. I will tell you that I'm better at calling calls than I am at puts, but that's another story for another time. So that is that's how we do that. Let me see if I can grab a good example. If I can pull this over here really quick and give you guys a good example of how we've been using these 9 EMA retests. Let me turn off that, turn that on, and we'll pull this over. I think you guys can still see that. Make sure my picture's out of the way. Okay. So one really cool thing, and I know a lot of you guys I've already explained this like 5 or 6 times. So if you've seen it on the Discord and you know all about these 9 EMA retests, go ahead and just skip this part. It's not, you've seen it 500 times. So with that being said, when you see the EMA flip, right? So you see this, and I hate TradingView for drawing circles, but anyway, you see the EMA flip like this circle right here, right? So we flip from red to green, which is good. We saw the support line that we drew from this morning. As you can see, it touched it a bunch of times, tried to break over there, but initially just resisted back under. Again, tried to break over here, got pushed back under. Small red EMA flip. Anyway, so when this EMA flipped to green, it started to kind of get away from itself pretty quick. The stocks normally like to follow the EMA really close, and a good example is like almost perfectly right here, right? So at no point was the stock price, which obviously is our candle, got too far away from our EMA cloud, right? It just kind of followed it up the same path the whole time. So one thing that you can look for is when you do flip on your EMA, sometimes because it is so small, right? Because when your EMA flips, it normally starts small and then grows bigger the more bullish the sentiment is. So when they're kind of small like this, you get these things that I like to call EMA divergence. And then so it is basically just the big push up or down away from your EMA. Okay, well, away from your EMA. A good example is this candle, probably these 3 candles right here, 3 or 4 candles. So because the EMA was, okay, I have to stop trying to draw. Because the EMA was so small, right there, these candles got very far away from this band, okay? And so normally when you get too far away from your band, you will start to fall back into it. That's just kind of normal. Like I said, the stock price wants to follow the EMA cloud. And so once you get too far away, you will see kind of, you will either be stagnant in your stock price as EMA catches up, or you will start to fall back down until you catch the EMA. And so with that said, that's why I have these red circles here. These were 2 separate times that EMA got too far away from where we really wanted it. And so that is where I like to time my entries, especially for this type of trading. So like right here, right, as that candle came down back into, or what I call retest the EMA, that's a perfect time for an entry. If you show that it is holding on to that EMA in a strong fashion, it's a perfect time to get into calls or puts on the opposite direction. So I can show an example on that one with Amazon from yesterday, because you guys saw that we didn't play that one the best, but I can show you the flip side. So anyway, you enter calls here, and this was your resistance from this morning that we saw, right? So you get in on the EMA retest, you break over resistance, and again, this was a big divergence away from our EMA. I mean, look how far away right here we are from this cloud, right? This is really big. So we knew potentially it was going to happen again. So because we had resistance from days and days, like, let me see how far back. Okay. So we had resistance here. As you can see, it touched 1, 2, 3, 4 times. So that was another good resistance. So we came down, touched our EMA, retested resistance, and then it was off to the races. So again, I'm really bad at explaining things. I'm good at what I do and I know how I do it, but I'm really, really bad at explaining things. And so if you guys have more questions, shoot me a DM. I'm going to try to post this on the Discord, but I have a feeling it's going to be way too long. But I'm going to do my best and we will go from there. And yeah, so that's kind of how I trade on a day-to-day basis. Another, like a quick summary, a quick rundown of how I do things. I'm going to start with data, right? I'm going to see what the flow is. Is flow red? Is flow green, right? If flow is, let's just say green, right? If flow is green, I'm going to check GEX levels. If there is a GEX level that is red to the upside and flow is green, I'm going to be looking at calls on whatever stock I'm looking at, right? So red GEX, green flow. That's where we start. That's how we know we're going to buy calls. From there, we pick our stock that we want, and we start looking for patterns, which we didn't go over patterns. Patterns are really basic. I have a whole write-up on them on my channel. If you looked in the pinned comments, there's a whole thing on patterns. You'll probably want to learn those in the future. But anyway, so we start looking for patterns. If we don't see any patterns, we start looking for support and resistance. Those should probably be on your chart already, at least ones that are historical. So 3-4 weeks old, that support level. You can do like intraday or pre-market ones like I did here, right? So like this is a pre-market support level. This is an intraday support level. Both are important. But you start looking for things like that. Start looking for support and resistances after you've done your data research, right? And so once you do that, you start looking at your EMAs. If your EMAs are diverging, wait for the pullback. That's when you enter. And then if you enter at a good point, you can trim at resistance, and that secures at least some profit. And then you can ride out each and every resistance break moving forward. So yeah, that is how I trade. I know that's a lot, and there's probably a lot to digest, and I know there will be questions, so just shoot them my way. So yeah, guys, thank you for sticking around. This ended up being almost a 25-minute video, and I really don't feel like I've explained hardly anything. So yeah. So anyway, guys, thanks for sticking around. See ya.